In 2025, Bitcoin has once again become the center of attention across the global financial markets. From institutional investors to individual traders, everyone seems to be talking about Bitcoin's continuous price surge. The world's first cryptocurrency has defied expectations, breaking through resistance levels and establishing new all-time highs. But what exactly is driving Bitcoin's rise in 2025, and why does it continue to dominate headlines, portfolios, and the future of finance? To understand Bitcoin's current momentum, we must first look at its foundation. Bitcoin operates as a decentralized digital currency built on blockchain technology. It's independent of governments and central banks, which means its value is determined by the market's trust in its scarcity and utility. The supply of Bitcoin is capped at 21 million coins, making it inherently deflationary. This fixed supply creates a simple economic principle. When demand rises and supply remains limited, prices increase. One of the major reasons Bitcoin keeps rising in 2025 is institutional adoption. Over the last few years, large corporations, hedge funds, and even governments have integrated Bitcoin into their financial strategies. Institutions like BlackRock, Fidelity, and MicroStrategy continue to hold billions of dollars in Bitcoin. Their participation provides market stability and confidence. Institutional demand signals to retail investors that Bitcoin is not just a speculative asset, it's a long-term store of value. Another driving factor is the Bitcoin halving event that occurred in 2024. Bitcoin halving reduces the number of new coins created with each block, cutting the miner reward in half. Historically, every halving has triggered a bullish cycle as the new supply entering circulation decreases. The 2024 halving reduced the daily issuance rate to just over 450 new Bitcoins, tightening the available supply while demand remained strong. This supply shock, combined with increasing awareness, helped push prices upward throughout 2025. Macroeconomic factors also play a major role. With continued global inflation and the erosion of fiat currency value, investors are searching for safe havens. Bitcoin's decentralized and limited nature makes it appealing as a hedge against inflation. In many countries, weakened national currencies and rising debt levels have pushed people to seek alternatives like Bitcoin. As central banks struggle with policy responses, Bitcoin continues to present itself as a digital store of value, similar to how gold functioned in past decades. In addition, the growth of Bitcoin ETFs has been monumental. In 2025, several exchange-traded funds backed by Bitcoin have gained regulatory approval worldwide, allowing traditional investors to gain exposure without directly holding the asset. These Bitcoin ETFs have introduced billions in new capital into the market, creating steady institutional inflows and reducing volatility. Accessibility through familiar financial instruments has bridged the gap between traditional finance and crypto markets. The increasing integration of blockchain technology across various industries is another reason behind Bitcoin's success. Blockchain adoption in banking, supply chains, logistics, and digital identity systems has amplified confidence in decentralized technologies. Bitcoin, being the first and most secure blockchain network, naturally benefits from this rising global adoption of decentralized systems. As the understanding of blockchain's reliability grows, so does the credibility of Bitcoin. Another key factor behind Bitcoin's rise in 2025 is technological improvement. The introduction of the Bitcoin Lightning Network has made transactions faster and cheaper. With scalability concerns largely addressed, Bitcoin can now be used more efficiently for day-to-day payments. This has led to widespread merchant adoption. In countries like El Salvador and Nigeria, where Bitcoin is used for remittances and payments, transaction volume continues to climb. The Lightning Network has made Bitcoin not just a store of value, but also a medium of exchange. Furthermore, we can't ignore global political instability. As wars, trade tensions, and sanctions continue to disrupt economies, people are increasingly turning to Bitcoin as a borderless and censorship-resistant form of money. Bitcoin allows individuals to move value across borders without intermediaries or restrictions. In regions facing currency devaluation or strict capital controls, Bitcoin has become an essential financial tool for wealth preservation. The narrative of digital scarcity continues to drive long-term investors. Only 21 million Bitcoins will ever exist, and over 19.6 million have already been mined. This leaves less than 2 million to be introduced over the coming decades. When large institutions and countries accumulate Bitcoin for reserves, it limits the circulating supply available for retail investors, thereby increasing scarcity and driving prices even higher. Another factor worth noting is mass retail participation. With mobile trading apps and crypto-friendly banks now widespread, more people than ever before can buy and hold Bitcoin with ease. Educational awareness has grown, and younger generations view Bitcoin not as a speculative bubble, but as a legitimate investment class. The Gen Z and millennial investors, digital natives who understand blockchain technology, are now the biggest adopters. The psychological factor of FOMO, or fear of missing out, plays an enormous role as well. Every time Bitcoin surpasses a previous high, new waves of investors enter the market, hoping to capitalize on potential gains. This influx of capital amplifies the upward momentum. Unlike traditional stocks or bonds, Bitcoin's volatility and transparency in pricing make it highly attractive for speculative trading. Moreover, Bitcoin's dominance continues to increase relative to other cryptocurrencies. While altcoins have their place in innovation, Bitcoin remains the benchmark, the original digital currency trusted by institutions, governments, and long-term investors. Its brand recognition, proven security, and global acceptance keep it ahead in the digital asset hierarchy. The global push for financial independence and decentralization is another contributor. Many individuals have lost trust in centralized systems after repeated banking crises and government overreach. Bitcoin provides a way for people to take control of their finances. This ideological movement drives adoption as much as profit potential. Bitcoin symbolizes economic freedom in an age of financial surveillance and control. Another notable aspect is corporate treasuries using Bitcoin as a reserve asset. Companies increasingly hold Bitcoin as part of their balance sheets to hedge against inflation and currency risk. This corporate adoption gives Bitcoin legitimacy and reduces its perceived risk. As more firms announce Bitcoin holdings, it creates a domino effect of credibility and further institutional adoption. Let's also consider the impact of media influence and public perception. Bitcoin's rise often becomes a self-fulfilling prophecy. Positive media coverage attracts new investors, which increases demand and prices, generating more news cycles. Prominent financial analysts, tech CEOs, and economists now openly support Bitcoin as part of a diversified investment portfolio. When major voices endorse Bitcoin, mainstream confidence grows exponentially. Additionally, the rise of AI and data analytics in trading has made Bitcoin markets more efficient. Advanced trading bots, machine learning models, and predictive analytics have created strategies that amplify liquidity and reduce irrational volatility. This professionalization of the crypto market has made it more appealing for conservative investors who once feared its unpredictability. The growth of crypto-friendly regulations in key markets has also strengthened Bitcoin's credibility. Countries like the US, UK, and Singapore have implemented clearer legal frameworks, allowing Bitcoin exchanges and custodians to operate with transparency and compliance. Regulatory clarity reduces uncertainty and invites institutional capital that was previously hesitant. On a cultural level, Bitcoin has transcended being just a financial asset. It has become a technological revolution and a movement for economic sovereignty. Bitcoin communities around the world are educating millions about financial literacy, decentralized ownership, and the future of money. The social narrative fuels ongoing enthusiasm, keeping the network strong and expanding. Lastly, the scarcity effect combined with long-term holding behavior known as the HODL culture continues to drive price appreciation. Data shows that over 70% of Bitcoin in circulation has not moved in over a year. This signals strong holder conviction and limited liquidity in the market, creating upward price pressure as demand grows. All these forces supply reduction, institutional demand, global economic conditions, and technological growth combine to make 2025 a defining year for Bitcoin. It's not just a bull run, it's a reflection of Bitcoin's evolving role in the financial world as a hedge, an investment, and a tool of freedom. If you've learned something valuable from this deep dive into why Bitcoin keeps rising in 2025, take a moment to subscribe for more in-depth discussions on cryptocurrency, blockchain, and the future of digital finance. Keep learning, stay curious, and remember, understanding is the first step to mastering the crypto revolution.